The runoff begins. That's our topic for today's Backstage Pass. Good morning, I'm James Lopez, president at HomeFi Corporation. Hope you had a great weekend. We're going to talk about the runoff, and we're not talking about political runoff, races, or anything like that. It's actually something else. We'll get to that in just a second. Before we do, let's jump right into the bond market today. Mortgage bonds are down 22 basis points at the time of recording. The 10-year yield is up about 6 basis points, and mortgage bonds so far have been kind of volatile this morning. They were down about 11 basis points, got as bad as 37 basis points, and they've kind of receded. And really what's driving that this morning is really stocks are up. So stocks kind of slid towards the end of the week yesterday. They're bouncing back today. And so mortgage bonds and the bond market's just on the stock seesaw a little bit right now. There's also a corporate bond issuance that happened today that's adding a little bit more supply into the bond market. But that's kind of what's going on. There's no real news today, so we don't expect to see a ton of volatility, more volatility in the bond market today. But what it's going to mean for mortgage interest rates, though, is that interest rates are going to open up worse than they were when they closed on Friday. And there could be some potential repricing throughout the day, just depending on when lenders release their rates. We could reprice for the worse, reprice for the better, just depending. So we'll bring you that news as it comes. Now, as far as news for the rest of the week, number one newsmaker this week's coming out on Friday. It's the CPI, it's Consumer Price Index. It's the Fed's favorite measure of inflation, and that's going to be released on Friday. And that news, coupled with any comments that any of the Fed members may make, interviews and things like that, those things have the potential to move the markets. So as that happens, we'll make sure we bring that information to you. But other than that, there's not a ton of news out this week. That's the biggest, news item that's going to be coming out this week. Now, jumping into our topic that I wanted to talk to you about, the runoff, all right? So we've talked before about the Fed and how the Fed is carrying a balance sheet of U.S. Treasuries and mortgage-backed securities, all right? What happened during the pandemic, and even before that, the Federal Reserve had purchased mortgage-backed securities and U.S. Treasuries and in order to help keep the economy going. And basically, they've carried a balance sheet of these securities that they've purchased. And as the securities have matured, the bonds and the treasuries, as they've matured, they've reinvested the gains back into the markets. So they're kind of constantly cycling through and purchasing new bonds and new MBSs, new mortgage-backed securities, new treasuries, as the ones that they have mature. So they're carrying a balance sheet, is what it's called. Well, several months ago, the Fed announced that they're going to start to run off their balance sheet. So that means that they're going to stop reinvesting the gains as the securities that they have mature. They're going to stop reinvesting those. Now, we've talked about the fact that the bond market is a supply and demand market, just like every other capital market. And so whenever you have the supply staying steady, but you have demand starting to decrease, which is most likely what will happen as the Fed stops their reinvestment program, demand will start to go down. So you have steady supply and a lowering of demand. You're going to have a lowering of the prices. All right. So as bond prices lower, their yields go up. And whenever we see that happen, specifically in mortgage bonds, that's when we start to see interest rates go up. So as the mortgage bond prices start to go down, interest rates start to go up. That's what we're expecting for the month of June, because that's what the Fed said they would do. They said they're going to start their balance sheet runoff in the month of June. All right, so it's important to know that that's what's coming this month. We haven't seen it. We haven't seen it start yet, or at least not the effects of it yet. We haven't seen the effects of it yet, and it doesn't mean that the Fed can't change their mind. They may not do that, but that's what they've said they're going to do. All indications show that that's what they're going to do. So what that means for us and in the industry and consumers is that in the month of June, we're going to see interest rates continue to climb. That's most likely going to be the outcome in this scenario. So it's important that you understand that if you're in the industry, or if you're in real estate, if you're in mortgage, it's important to understand that so you can educate your customers, educate your buyers and borrowers. If you're a consumer that's watching this, it's important to understand and know, if you're out there in the market shopping for a home, that this is coming in the month of June. And look, we've got a very specific, great tool that can help mitigate the pressure of rising interest rates. It's called Lock and Shop. And with Lock and Shop, you don't have to have a contract or even an address. You can lock in an interest rate for up to 120 days while you shop. And the second you get a contract, you send that contract into us, and your interest rate is locked for up to 120 days. So it's important to know that this is what's coming, and here's how you can mitigate your risk as a consumer or real estate agents and mortgage folks. This is how you can help your customers protect themselves in a rising interest rate environment, and educate your customers. Let them know, hey, this is what's happening. The Fed is doing this. This is why interest rates are going up. Here's how you can protect yourself in a rising interest rate market. All right, so that's all the news that we have for today. Look, just remember, stay positive, all right? Everything's good, stay positive. And here's the deal. If you have any questions about lock and shop or the balance sheet runoff that we're discussing, leave a comment, shoot me an email. Love to answer any questions that you have. Stay positive. I hope you have a great week. We'll see you tomorrow.